Good afternoon and welcome to Credit Suite Live. I am Keith Knapp. I will be taking you on our fantastic journey and helping all you wonderful business owners and entrepreneurs get as much money at the best rates and terms as possible. Today, I'm going to be breaking down several different options for financing. And what we're going to be looking at is we're going to be looking at comparing three different types of loan options and comparing them to see which one you can get the fastest and which one's going to be the best for you. We get started, there's a couple things. One, let me know where you're from. Come chat with me. I love talking to you guys, love helping you out. If you have any specific scenarios for financing or funding your business, throw them out to me. I'd love to help guide you through this process, give you some real life tools, some real feedback on how you can improve your options for funding. And before we get started, we do have our Business Loan Broker Challenge coming up March 27th to the 29th. Now, look, if you love helping businesses and maybe you're in the B2B space or you want to add services to your business, the Business Loan Broker Challenge is the perfect chance for you to find out if this is really something you want to dig into. It's free, 3-day event, March 27th, 28th, and 29th. We've got a bunch of speakers coming in showing you how to offer business loans. Business credit is an option for your business. It's a great time. You can scan the little QR code right over here down there and see what's going on. You'll get a nice little pop-up on our screen like that, and it will take you to our website, which is businessloanbrokerchallenge.com. Here you can register. You'll see all the great information about it. It's always a great time. The Business Loan Broker Challenge, one of my favorite events that we put on every year. It's just a lot of fun, a lot of great information being shared with everybody. So make sure you check that out. Again, you can go to businessloanbrokerchallenge.com, or you can scan the QR code right there, and I'll throw it up again at the end for you. So let's dive in. Let's talk about money. Let's see how we can get you guys some money today, because that is the name of the game. So today, what we're going to be doing is we're going to be talking about three different types of financing options, and we're going to take a step-by-step comparison to show you, maybe help you decide what's going to be the best option for funding your business. Now, we're going to cover several different ones, but today I want to stay kind of in the alternative loan space. So this isn't going to include like SBA loans. It's not going to include traditional, really what it's a tradition, but really today is to help you find the financing that you may need to start and grow your business, or if you just need something to kind of push you to that next level. These are going to be some of the best loan options to do that. So to get started, I did something a little bit different today, and I'm going to be sharing screens. And as I'm going through this, if you like this, let me know, because I'm the one who puts all this stuff together for Ty anyway. So you can let me know what you think about it. But what we did is we broke down really three different options, and we're going to be spelling these out for you and walking you through the process as we're getting going on it. And then once we're done, we're going to share this video the video is going to be shared on social media, but we'll share the image there too. So that way, if you just want to take a look at it, you want to talk about it with your partners, you want to look at any of the options that are available and do a little bit more research, you'll absolutely have that available to you that you can use at any time. So let's get started. Let's get started by looking at what we're going to be comparing. Looks like Aldo has a question. I'm terrible with pronunciation of names, guys, so I'm sorry. Turned insurance-based collateral loans. That's something that we haven't dove too deep into, and I'm going to let Alfredo, who's helping me with the comments and stuff, take a note of that. That's actually a great option that we haven't dug too much into, that I think would be something great that we can look into. But today we're going to stick with really the 3 C's of what we're talking about. And for those of you guys who like and follow our channels, which all of you should, because we're constantly giving you as much information as we can, the 3 C's are based off of 3 options. First one is cash flow financing. So it's really just based on how much money your company's bringing in. It's based on the revenue that you're able to generate. And we'll get into all the options. The second one's going to be secured financing, or collateral based, is the second C. So you got cash, you got collateral, meaning if you have assets that you can use to secure a loan, it will get you financing based off that. And then the third option is credit-based. So credit-based meaning that you can use your personal credit, maybe a partner's personal credit, somebody's credit to be able to get the financing that you need to get things going. With this comparison, what I did today is I broke this down into, let's share my screen again here because it'll show you. We broke it down into 4 different categories. So our pink one's going to be revenue financing, and this we're mostly going to be looking at either cash flow financing or merchant account financing. Secured financing, we're going to look at a couple different options. And then the credit line hybrid or term loans are the 2 other credit-based financing options. And those are going to be in green, secured financing in blue, revenue financing in pink. And then we're going to go through the 4 different variables, like how much can you get with it? What kind of money can you expect from it? How fast can you get it? Because again, we're making a comparison of the fast business loans that are out there and how quick you can get money in there. We've got somebody on Facebook that says, greetings from the bluegrass state, Kentucky. Good to see you guys. Glad you can make it. And then we're going to be looking at terms and costs, like how long are the terms? Is this going to be something that's going to be viable for your business? Is this a short-term solution? Is this a longer-term solution? And then how much is it going to cost you overall? Kind of rates, fees, terms, things like that. And then I think one of the most important things is how flexible is the financing. When we're looking at flexibility, we're going to be comparing different things like cash flow, how much cash flow you have to have, what kind of credit you need to have, what kind of assets, and really just help you understand the qualifications of what it takes to get this. And then if you guys have questions or if you have a scenario based off of your business, let me know. Oh, sorry, I moved that around on accident. Let me know, and I'd be happy to talk with you about it, talk with you through it, and get things going. So the first one, the first thing that we're going to be talking about is we're going to be talking about revenue financing. So revenue financing or cash flow financing, as we commonly refer to it, is one of the easiest types of financing to get. The reason is because there's not a whole lot of requirements outside of just your company running cash flow. As we're looking at this, the nice thing about cash flow financing is that it can actually give you quite a bit of money based off your cash flow. So traditionally, you're looking anywhere from $10K to up to $5 million in financing. Now, a quick side note as we jump into the options of cash flow financing. One thing to know about cash flow financing is just that it is based off the cash flow of your business. So if you're looking at it, as a long-term option or a long-term solution for some of the things that you're needing, this is more of going to be your short-term financing. But the beauty of it is you can actually get this in 24 to 48 hours, which is great. Like, I'll give you a real life example that I had when I was on the sales team here at Credit Suite. I talked to one of our clients who owned a trucking business, and so we sat down, we looked at his scenario, and what had happened is his truck had broken down. So that was his sole source of generating income. And for those of you guys who are in the truck driving industry or any industry that relies on a primary piece of equipment, if you don't have that, I mean, you are just scrambling. There's no way for you to make money. You can't take orders. It puts you in an upside down position where you're constantly losing money because you're still paying for the truck, you're still paying for all the stuff that you need, but now you're not generating revenue. This was one of those scenarios because typically, as much as I like cash flow financing, it's not always a great fit for everybody. But in a situation like this, he was looking at it going, man, if I can have the money, I can have my truck up in a week, giving him that opportunity to get out there and start making money again, to get his business back up off the ground. And so we were able to help him get this secured. He was approved within like 1 or 2 hours. I mean, just ridiculous amount of time, and then had the money in just a little bit over 24 hours. And he was able to get his truck back up and going, start making revenue, and basically not let his business tank because of something like, and I forget what it was. It was something pretty major inside of the business or inside of his truck, but he got enough money to be able to get back on the road. And it was a great solution for him because he was able to get out there and actually use it. Cash flow financing is a little bit of a shorter term, like what we were talking about. So I'm pulling up my handy dandy cheat sheet here. So the terms and costs, you typically, the terms on a revenue financing loan are going to be anywhere from 6 months to 24 months. So 6 months to 2 years basically is a lot of what you're looking at. 6 months being the minimum amount of time that you can take, which makes sense, and that's part of the negotiation process. And when you're looking at the terms, you're going to be able to choose from that. Now, like if you're doing a smaller amount, like I think the minimum loan amounts that they have are, like I said, 10,000 to 5 million. If you're going with the shorter amounts, a lot of times they're going to want to see that paid back in a smaller amount of time. Or like if you go into them, you're like, look, I'm doing 30,000 a month. I only need $15,000 to kind of get me over this hump or to get things going. They could extend that out for a little bit longer because you're not using all of it. So that's one thing to keep in mind. Now, the other side of revenue financing is revenue financing. You pay back according to your revenue. And what I mean by that, oh, messed that up. What I mean by that is that if they're going to look at it and go, they're looking at how much revenue that you're bringing in, and then they're approving you based off of that. So you can't go to a cash flow lender and go, hey, I want $1 million and I'm only doing $12,000 a month in gross revenue. They're going to look at that and say, no, that's not really how this works. Now they'll also look at it and go, you've been consistently doing $12,000 in revenue for the past 6 months, so we can extend you $12,000. So basically, it's like giving you another month's worth of income. Now the cost, though, this is where you have to be careful. The factoring cost is what they refer to it as, and the cost can be like 1.1% or 1.10% up to 1.45%. And what that means is, and we're going to go back to a nice even number because it's early in the week still. So let's say you get $10,000 worth of financing, $10,000, and the cost is 1.1%, meaning that you're going to pay back $10,000 plus that additional 0.1%. So in this situation, it would be you would borrow 10,000, you would pay back 11,000. And the cost can go up to 1.45%, meaning that if you borrow 10,000, you would pay $14,500 back. And this actually has a direct correlation to this next part on flexibility. And the thing that's really that makes cash flow financing effective, you can't see that very well, so let's zoom in here, is that it's, when you're looking at it, the flexibility is it's got minimal credit requirements, which means that if you're in a situation that you can't borrow money on your own, you can't take out a personal loan, or you just want to leave it in the business name, or you as a business owner, you may be overextended, you may have just used your credit and or ran up some personal credit card bills or whatever the situation may be. The credit, like I think the minimum credit score is 550. I mean, like really, you've got to be intentionally doing some stuff or really going through a bad storm in your life to be below a 550. So it's very open, but the credit approval actually impacts directly your terms and costs. So if you go in and you've got a high personal credit score, you've got good company assets, you've got some of these other factors in there, that's when you can take advantage of these lower costs. The other thing to know about revenue financing is that it's very much a relationship lending program. When I talk about relationship lending program, means this: they're not just going to look at you and go, oh, well, you know what, you have a business and you've been working with us, we're always going to give you 1.45%. They may start you on a lower amount, meaning you're running 12,000. They say, you know what, we're going to give you 10,000. We're going to give it to you at the 1.45%. We're going to give it to you on 6 months. Not the greatest terms, kind of the worst possible that you can get. But you get in there, you get it knocked out, you get it paid back as fast as you can. You show them that you're responsible with borrowing money and paying back money. And the beauty is, the next time you go to them, they're going to look at it. Now they have a track record. And that's when you start getting into the lower amounts. That's when they'll look at it and go, hey, second time back, let's give you a little bit more. And because we're giving you a little bit more, we're going to make a little bit less on it. So let's knock you down to 1.25%. And then you establish the relationship. You keep using it over and over again, kind of as just a cash flow buffer for your expenses, for your ongoing cash flow. And now they start giving it to you at 1.1%. And you start getting those 24-month terms to be able to pay it back. There's a lot of flexibility in building relationships with cash flow lenders. And when you're looking at cash flow lenders, there's a lot of different options. You've got just straight cash flow, or what we call as business revenue financing, where they're actually going to look at your bank statements. They're going to look at all the money that you bring in, whether you're getting paid checks, invoices, credit cards, ACHs, whatever. They look at the combined gross aggregate of how much revenue the company's bringing in. Opposed to other cash flow financing options, they may look at like a merchant account financing, where with the merchant account financing, they're going to look at how much are you running through this specific vendor or this merchant that is collecting credit cards. So let's say you're running your business off of a Stripe credit card or a Stripe merchant account. They'll go through Stripe and they'll look at it and go, okay, you're doing $12,000 a month, and then they'll go through their formulas from there and start working accordingly. But the other thing about it is that some of those relationships, when you're looking at cash flow lending, like merchant accounts, you can go to PayPal, and if you're using a PayPal account to collect all your revenue and you get a loan with them, a lot of times they're going to take your banking relationship or your merchant relationship into consideration, and that's where sometimes you can negotiate those lower rates, those lower fees, and longer terms with that as well. So cash flow financing, revenue financing, business loans, however you want to look at it. Again, one of the things, great flexibility, wonderful if you've got credit issues, you're trying to work around that. Great if you haven't really built much assets or tangible assets such as equipment, real estate, 401ks, stocks, bonds, mutual funds inside of the business, and documentation is minimal. A lot of them now just work off software basis where you can connect it to your bank account and it goes right in. So that's a great use for it. And again, 24 to 48 hours, one of the fastest ways. Oh man, I was sitting there going through all this. One of the fastest ways to get in there and get the money that you need very quickly. So let's look at some secured financing options. Now that we've compared that, secured financing options, how much can you get? This one is incredibly dependent on the value of your assets. So the way that your secured loans work is they look at the type of asset that you're using. Assets that can be included inside of a secured financing. You can. There are some options with my favorite one by far and away is the AR factoring. So that's accounts receivable or invoice factoring, meaning that if you have outstanding invoices, they'll actually take those and then pay you a percentage of it. So you may give it to them, they go, okay, we're going to give you 85% of the value of these invoices. They'll take over the collection process. So basically you get 85% of your money up front. You pay, and then when they collect it, they keep the 15%. They pay you the remaining amount. Some of the other options that you have for secured financing, you have equipment where you can do an equipment lease back, where there's companies like, let's say that you're running a construction company, you have a backhoe worth $100,000. They can look at it and go, okay, we're basically going to buy this back from you and then let you lease it. So the equipment never leaves the job site. It's still available. You get access to that money, and then you continue leasing your equipment that you sold to them back from them, making payments until that loan is repaid. So the tangible order of ownership goes from you own it, you transfer it to the bank leases it, and then sells it back to you based off of you repaying that. It's called a lease back. It's a really cool program. If you're in a industry that requires equipment, it's a great way to get options for that. How fast can you get equipment financing, or can you get secured financing? It's not quite as long, or not quite as fast, not really the 24, 48 hours, but it's still about a week. In a week and lending time is still very fast way to get money, very fast way of being able to get access to funding if you need it. Next up, we're going to look at the terms and costs for this. So as we're going through this, there's some things that as you go through it, secured financing really starts to take a turn because there's a lot of different options like we just talked about. So for example, if you're looking at equipment financing, we were looking up rates and terms for equipment financing. There's some as low as 4.99% today, which in modern lending terms, that's not terrible. But some of it's going to depend on Some of it's going to depend on the type of financing. So like if you just get a secured line of credit, meaning that you want to use your stocks, your bonds, your mutual funds to secure that, that's also really, it's going to be relatively low because there's not a lot of risk for the lender, meaning that if a lender wants to look at getting you option, or they want to look at loaning you money, if you have $100,000 stocks, bonds, mutual funds, and then they give you $100,000, you default on it, they still have their core investment inside of those stocks, bonds, and mutual funds that they can recover, so that they're not getting a loss, which is a wonderful way to go about it. So 4.9% financing. Looks like we have a comment here from At Home with Tyra. What are some of the best lenders for revenue financing? Will you get that 1 to 1.45%? I want to avoid traditional MCA financing. That's a great question. My favorite place to get this is actually with us, because that's what we do. And this will take you to our financing finder. This is our way. Part of what we do for all of our clients and all of our audience is that if you have a loan that you want, we've got relationships with hundreds of lenders that you can actually just go on. We'll sit down, we'll look at it, figure out what your needs are, what you're trying to accomplish, and then we'll present you with the options to be able to find the lender that really makes the best sense for your situation. You can scan that QR code right there. It'll take you right to the form. It takes you seconds, and we'll get back with you same day, let you know what you can qualify for. And then if there's something that doesn't work for you, the reason that I'm going to recommend us, one, because I love Credit Suite, it's what we do. But the other side is that if you start talking, I'm going to pull this back up if you guys need it. If you start talking to lenders directly and you say, hey, this is what I'm looking for, and they tell you no, you're done. You're done with that lender. Now you have to have that same conversation 3, 4, 5, 6 times, opposed to we've already had that conversation. We can work on it and help you find that solution as well. So it just really puts you in a position where it puts you in more of a position that you're able to streamline your time, save your time, so that we can focus on finding you the money. And obviously, we're going to get paid a little bit off of that. That's just how it works. It's an affiliate relationship. But these are companies that we've vetted. These are companies that Ty trusts. These are companies that Megan trusts, that we've proven with hundreds and hundreds of customers that we know are going to treat you well. And if they don't, we've got enough pull with them because we send them a lot of business to make sure that you're being taken care of and that there's no funny business going on with it. All right, so let's jump back into this. So how flexible is secured financing? Flexibility on secured financing, again, since you have because you have assets that are there, they're secured. The flexibility is it's got minimal credit requirements, because again, the loan's secured, they can recoup their investment. Assets, you're going to have assets. That is really the defining point of this of secured financing. You have something in place that's going to secure that for the value of the loan, and you can get and you're going to be approved for the amount based on the value of the assets. Traditionally, they're going to want to see just a minimum of 6 months of business. They're going to want to see that you have some capacity to repay the loan. So if let's say you're making $20,000 a month, and they look at your business, they look at your cash flow, and they go, you know what, you're not going to be able to support a $12,000 a month payment. So there's some common sense that goes into it with the factoring of payments and what the repayment's going to be on that. But it's a cheaper way to get money. It's a cheaper way. It's going to take you. Let's make sure I'm not messing things up. It's a cheaper way of getting money that's going to be less out of your pocket. That's going to help you save overall if you have the assets there to take advantage of it. So is it better than revenue financing? That is incredibly dependent on your personal situation, meaning that if you need the money almost instantly, as fast as possible, you've got the cash flow, but you don't have the assets, cash flow financing, revenue financing is going to be a better way to go. If you've got stuff that can secure the loan, you can wait a little bit longer, and maybe this is more of a more strategic growth plan. Then that's where secured financing is going to be a better option for you. It's going to save you more money out of your pocket. It's going to give you some more flexibility in the financing. The rates and fees are really going to be the primary driver within that are going to help out. All right, so those are those first two. The last one we're going to look at is the credit line hybrid. And the reason we love the credit line hybrid is because one, it's our program. It's one that we have a lot of flexibility, a lot of control over. It's one that's going to give you that is probably going to give you the most amount of your money with the least amount of revenue from the business, with the least amount of requirements, except for one. Now, let's get into how much you can get with the credit line hybrid. You can get up to. Sorry, I'm juggling a lot of screens here, so if I'm missing some of these, just holler at me and let me know. So with the credit line hybrid, you're going to get up to $150,000 in unsecured financing. The big variable inside of how much financing you get approved for with like the credit line hybrid, man, my picture disappeared. Oh well, I'm not that pretty today anyway. The big factor in how much you're going to get approved for with the credit line hybrid is the amount of credit that you have on your personal credit. What I mean by that is they're going to look at your personal credit cards and they're going to look at your top personal credit line that's over 2 years old. So if you have a credit card, let's say you have a personal Chase credit card that has a $10,000 credit limit. Traditionally, with the credit line hybrid, you can get 4 to 5 times that highest credit limit. So if you've got a credit card that has a $10,000 credit limit, you can potentially be looking at 40, 50, maybe even up to $60,000 worth of open credit lines that you can use. How fast can you get that? Let's see. My screen share disappeared. Gotcha. All right, here we go. How's that? So let's get back in this. So with the how fast can you get the credit line hybrid? The credit line hybrid typically takes around 2 weeks for the credit lines to start coming in. It's definitely not the fastest of them, but again, we're looking at options that are the fastest, kind of within each of their categories of cash, credit, or collateral, but still 2 weeks for up to $150,000 with minimal requirements is not excessive. Now, the credit line hybrid, one thing to know about this is that it is going to cost a little bit more. You can get up to, it's going to cost up to, make sure we spell that out, up to 10% of the credit offered, meaning that if you get $100,000, it may cost you $10,000. There's different factors that go into that, just depending on the type of, just different factors that go into it. Such as relationships and such as strength of your credit, things like that. So it's a little bit more expensive, but it's also the thing that I love about this. It's revolving, and so up to this point, the things that we've been talking about are more term loans, meaning that you're going to have a set term. With the revolving credit lines, that means you can use these forever. It means that as long as your business is there, as long as you're using these, you're going to have that option to be able to go through and use these credit lines as much as you feel that you need to. You can incorporate them into a daily part of your business. The other side about the credit lines, the credit line hybrid, is they grow with your business, meaning that as your business grows, as you're using them, you're paying them down, you're reusing them. The companies that you're working with are going to look at it and go, hey, we started at a $10,000 line of credit. Let's bump that up to $15,000. The credit still looks great. They're using it. We're making money off them. They're making money with us. Everybody's happy. Let's extend this and help them grow and us make a little bit more money, which turns into a win-win situation for everybody. So the thing that I like about these terms is that with it being fully revolving, it's like a credit card, meaning that you have the ability to make a minimum payment on it if you need to. So if you're using the credit line hybrid as as a loan for starting up your business, it's going to give you those reduced payments for a while that you can get in and kind of float by while you're getting things up and going, while business is starting to ramp up, as you're getting deals closed, as you're starting to make some money. You can make those minimum payments, pay back the credit lines as the company starts succeeding, and then you've still got those credit lines available afterwards. So, if you pay it down to half, you've still got half of that available credit that you can keep using. And one of my favorite things about it is that even though there's an upfront cost, the beauty is there is a very strong introductory rate of 0% up to 18 months, basically giving you a year and a half of interest-free money that you can use to basically keep those revolving amounts down, or sorry, I'm reading comments. Um, so you've got 18 months, a year and a half that you can make those big purchases, you can make those minimum payments, and it not be charged interest on it during those 18 months, which gives you a lot of flexibility. I have a question here. What's the minimum loan amount for the credit line hybrid? 25,000. So basically, they want to see that you have a credit card of at least $5,000 that's available available to use while you're using that. And the last point inside of here, let's talk about the flexibility of the credit line hybrid. Just like the other ones, the reason that I went this direction with this one, so as we were comparing these, our revenue financing when it comes to flexibility is there's minimal credit requirements, minimal assets, no assets, but you do have to prove income. With the collateral base, minimum credit, minimal income, but it's required for assets. With credit based, minimal assets, minimal income, but you have to have good personal credit. So you need to have at least a 700 credit score to be able to qualify for the credit line hybrid. You don't have to have any assets to be able to verify. You don't have to verify any income, and basically there's no documentation. They just need to prove that you have zero, that you have a legitimate business that's available, and you can follow all those with the fundability foundations. Have another question here. Does the credit card balance need to have a zero balance? That is a great question. With the credit line hybrid, a lot of it's going to be based off of score. Usually they want to see your utilization under 50%. So ideally you want to have 50 to 30%, 30%. But part of the way that the personal credit game goes is that if your credit score is up over 700, it usually means that your credit cards aren't maxed out anyway. But they want to see 30 to 50% utilization, and part of that's going to be based off of the depth of your credit. So if you've got multiple big personal credit lines that are reporting, it's going to help. It's going to help to kind of weigh against that factor in the algorithm of what they're looking at. So as you can see, when you're comparing all three of these options, each of them are going to have very different roles inside of how they're going to function with your business. If you're looking at revenue financing, you can get a quick money. Again, this is where I recommend cash flow financing is a great option if just something really unexpected happens, something that's not going to happen often. You have a breakdown, you have a software that goes defunct, and now with Silicon Valley Bank, who knows what's going to happen. Hopefully we've avoided a lot of that catastrophe. But if you have a software company that goes out of business, you got to replace your software. You've got just something that is just out of the ordinary that wouldn't normally happen. Cash flow financing is a great option for that. You can get fast money, 24 to 48 hours, 6 month to 24 month terms, 1.1% to 1.45% factoring costs. And then you've got a lot of flexibility there just based off of your credit. And then you've got secured financing, where if you've got cash, not cash, but you got stocks, bonds, mutual funds, equipment, real estate, anything that can secure that financing, even inventory. There are inventory financing as well. That's where you can take the value. Man, sorry, my software is kind of acting up here. I got big old lines going. Oh, here we go. That's close enough. With the cash flow financing options, you can if you've got those assets there, you can get approved for amounts up to the value of the assets. You can get it in about a week. Terms are really cheap. Cost is really cheap, really low, because it's a low risk loan for the bank, but you have to have the assets there. And then finally, our favorite startup program, the credit line hybrid. If you've got a 700 or better, or you've got someone in your business, and this is something we haven't talked about yet, with the credit line hybrid program, there's one of the best features of this that we talk about a lot is if you personally don't have that revenue, or you don't have that personal credit, you can actually bring in what's called a credit partner. And a credit partner is somebody who has partial ownership. So they're actually going to be an owner in the business, and they can be an investor or anybody like a family member, a spouse. But if they've got that good personal credit, you can get approved based off of their credit, get the lines of credit based off of what they have available. Now, from there, they're going to be able to, you can actually get that using leveraging their credit to use and their business credit lines. They're not personal credit lines. So it has a lot of value there. But with that, you can use it for startups. Again, no assets, no income, no cash flow, minimal, if any, documentation is required at all. It's basically just a credit application will get you approved for a program like the credit line hybrid. So that's really my comparison between the three. If you ask me, hey Keith, what's your favorite? What's your best one? There is no best loan that you can just generically come on to the internet and go, this is the best loan ever, because what's best is going to be dependent on your personal situation. And that's part of the trick of getting financing, really properly funding your business, is understanding, what is it that you need. So to be able to help you out with that, we have our free business financing assessment. And this is for you guys that you want to sit down with us, you want to figure out, what is it that you can qualify for, what's going to be your best funding option. That's where we can step in and help you. That's where our account executives are going to sit down, look at your financial situation, look at your 3 C's, look at your fundability, and say, okay, you know what, based off of what you're saying, here's your good starting point. And then from there, they'll actually sit down with you and help you come up with a strategy of, okay, now that we have you here, what's our next step in funding? What's our funding roadmap? What do you need next? Now that we got step 1 done, let's get you to benchmark 2. Let's get you to step 2 where you can get more money coming in, and let's get you to step 3. And then working with you to get you all the way to the point that you can get like SBA loans, traditional loans, where you can start to get in the millions of dollars worth of funding, and having and using your business, having that cash flow. So if you need help with that, we would love to help you out. Feel free to scan the QR code, or you can go to creditsuite.com/consult. We'd love to talk with you there. And once again, if this is the kind of stuff that you love, if you love business financing, you love business credit, you love helping people out, come join us for free at the Business Loan Broker Challenge. Again, March 27th through 29th. Next week it gets started. So come join us. We're getting a lot of great speakers there, a lot of fun. You can register with the QR code here, or go to businessloanbrokerchallenge.com to register for free. Look forward to seeing you there. I'll be there. I'm actually going to be one of the presenters this time to be able to talk about different options for your business. So that's all we got for you for today. Thanks for hanging out with me. Hope you can find the funding that you need to grow your business. And if you need anything, give us a call, 877-600-2487. Visit us online at creditsuite.com, and we will see you next time. Thanks a lot.